Welcome to part two of the stage analysis weekend video. I split the video up into two parts, as the first part was a little bit long, going through the watch list stocks. We were up to 40 odd minutes, so didn't want to drag it out too much, and I wanted to get the video out early enough so that you could obviously start watching. As a bit delayed by stock charts being down today for some scheduled maintenance, which obviously a terrible time to schedule some maintenance in the middle of a Sunday when people are obviously trying to use their service. We had to do that kind of stuff late at night when people are obviously asleep. So unfortunately, they chose to do that today. So did hamper us a bit. So just had a quick tea break. Very English thing to do, I know, but that's me. Love my tea. So get back into this now. So next up, we're going to go through the indexes and then the industry groups. I want to look at some of the mega caps that are reporting this week and see where they're at before they report, as well as going through the market breadth, which I think, obviously, as you know, I think is the most important thing of stage analysis. I think you could probably not look at a single chart and just use the market breadth analysis each week, and you would do much better than most. It's the key to stage analysis, in my opinion. Basically, if we obviously understand the weight of evidence and what's going on, it will keep you out of the market during the bad times, and it will get you in the market during the good times. It's that simple. You can basically throw darts at the board when it's in positive territory, and when you can obviously just get out of its way when it's negative. This year, it's been negative for a very, very large amount of the year. There's been a few brief periods where it's turned positive. So obviously, like I said, it helps to know what that's doing, and it's something I do each week for the members and go into quite a lot of detail on the market breadth charts, trying to determine what the weight of evidence is. So I'll cover that off in the later part of the video. So starting tonight, I wanted to go through have a look at what's been going on in the major indexes. This Friday, we had the follow-through day. So I did a post on Monday about the potential for a follow-through day this week. We didn't get it until Friday. So Tuesday's move jumped up, then obviously pulled back in. So it was a strong day on Tuesday. There was actually a lot of breakout moves and some good moves, but it did actually open. A lot of stocks opened higher and then moved down during the day. So it didn't actually make a higher close above that 21-day moving average. So potentially we've got this spring type event here on very strong volume on that day, strongest volume we'd had on the up volume since back in June there on that day. So you saw that big move we had in June off of the low. Similarly, had some strong volume there, as well as obviously the low itself. So we've now got a potential spring attempt and now a test as a follow-through day. So done something actually today on the follow-through data. So it's something I wanted to have a look at. So this is the 7th follow-through day attempt this year. So it's not been not great during the bear market. It's a concept that generally doesn't do great when the market is in a stage 4 decline, and the best ones seem to work once the market's already moving strongly out into stage 1, etc. So I asked on Twitter if anybody has actually got all of the data for the prior follow-through days. I know Greg Morton's got back to 2015 in his colouring book that he does each week, so which is really useful for near-term data. But I wanted to look back further than that. So in the short term, I just did a quick comparison of the stage 4 declines and using the point and figure double top breakouts. So what these are. This is something I do each week in the market breadth. So quick going to market breadth. We've got the cumulative point and figure breakouts minus breakdowns. So this is made up of the double top breakouts minus the double bottom breakdowns. So using that data, so we go back to this, we've got the point and figure double top breakouts. So from the follow through date on the 17th of February 2016, there was 222 double top breakouts, for example, and double bottom breakdowns, there was 26. So a net of plus 196. On January the 4th follow-through day, there was 153 double top breakouts, and there was 22 double bottom breakdowns. So on the 4th of January 2019, so plus 131. On the 6th of April 2020, the COVID follow-through day, that was a very explosive one. There was lots of breakouts. There's 474 double top breakouts on point and figure charts, and there was 49 double bottom breakdowns. So double bottom breakdowns or double top breakouts, they do include inverse PDFs as well. So a lot of those actual breakdowns I noted through these were actually inverse PDFs, obviously doing the other things. So the ones and then we've got the 21st of October. So one that we had on Friday, we got 93 double top breakouts and we got 122 double bottom breakdowns. So very different. So we've got minus 29. So very different to what we've seen in terms of the prior 3 follow through days that were the follow through days that worked and were the low that then moved on into stage 1. So there's obviously lots of follow-through days. There's lots of minor follow-through days and confirmatory follow-through days. So this is not all of the follow-through days. Like I said, there's been 7 this year already. So this is the latest follow-through day. So the fact that this has only had minus 29 net breakouts minus breakdowns versus all of these that had 196, 131 and plus 425. So I would say, for example, as a rough guide already, just looking at that data, I would be looking for a plus 100 or above in terms of for obviously a strong follow-through day signal there just from these. So what I want to do is go back even further. I want to go back and look at every single major stage 4 market over the last 40, 50 years, whatever. So we did a transitions, the stage 4, how stage 4's ended all the way back to the 1980s earlier in the year. So it'd be good to go through each one of those, find a follow-through day, if I can get the data for all the follow-through days back to then, and then obviously get the market breadth on the day for that. So this is just using double top breakouts and double bottom breakdowns. For example, another way you can look at it is for the new highs minus new lows. So obviously everybody can get the new high, new lows data quite easily. So for example, again, 17th of February follow through day, there was minus 30. 4th of January 2019, there was minus 31. 6th of April 2020, there was minus 54. And on Friday, there was minus 921. So a little bit of a difference there compared to these other successful follow-through days. So at the moment, this is looking a little bit of a wobbly follow-through day attempt just based on this data alone. So like I said, I want to look at it from multiple things. You want to look at it from the bullish percent index, the advanced decline index, and other market breadth measures that we use. So there's lots of different ways you can look at it and then see what the data was like on the successful follow-through days and compare it to the data on the follow-through days that failed. And then we could get a better picture. We might actually be able to find a way to make the follow-through day concept actually more robust by using the weight of evidence approach and using the market breadth data with it. Because in essence, it's just another form of market breadth. So it should be applied to the weight of evidence, in my opinion. So I think this could be an interesting study, but I need to get those follow-through dates first, as obviously it's something that IBD tends to change a little bit over time. There's been different definitions over the years. Spoke to a few people earlier, and Mike Webster said just to use the 1.25%, I believe he said, and 1% for earlier ones. So again, it's going to be a little bit difficult. It'd be good to get it from people that have actually had the official IBD ones and use that if they've marked them down. So I don't know, obviously, if I can get that or not, but it will be useful, and then we can compare it to the market breadth. So if we move on to the weekly chart, you can see obviously we've been in stage 4 for a while now, and as I've said previously, this has potentially been forming into a potential stage 1 structure. Still maybe just in stage 4 at the moment. We've not quite there. This obviously move this week, good reversal move. We've got this spring shakeout move. So in order for this to turn back towards stage 1, we want to see some closes above this declining 10-week moving average, start to see that turn back up, ideally start to see that hold, start to see this base structure get back above the 30-week moving average. Then at that point, it'd be clearer that we were potentially in a stage 1 type environment. You could start to be moving back towards stage 2 again, potentially, if we could get some further push up and out, might even make a higher low, lower high, and then that could potentially be a new stage 2 breakout level. But this, as you can see, we've got this what do we call it, an apex line. We've got this axis line. That was what I was going to say. So we've got this axis here where we've got previous highs and lows, so resistance and support levels all the way through this here. So if you look at that across all the way back to mid 2021. So if I get that across again, so you can see this area in here of resistance through this 4.2 and 4.3 area. So realistically, if we do move up, we could get a strong move up to that kind of area. That's a major level of overhead resistance in order to overcome. If we started to move back above this kind of area, then potentially we could be in stage 2. You could be in stage 2 lower, as we could develop lower highs and 200-day moving average, etc., could start to develop further down here. But at the moment, this is the key level that we need to overcome in order to move back towards stage 2 type environment. So we could have a strong move up and out. We could potentially be moving in stage 1 behavior, and then it could still just roll over again, and we could make yet another stage 4 continuation lower. We could go much lower even. We could have a major bear market. The world is obviously in a terrible state at the moment with inflation and obviously the various currency issues, etc. So there's a chance we could have a strong rally into the end of the year that takes us back up towards the 200-day moving average. David Ryan mentioned that this week as well. But then we could start to roll back over again, and we could make a continuation breakdown into the new year even. So we'll see what comes of it. We might not, this follow through day might fail once more. We might just roll over straight away. But at the moment, looking at this in the short term, at least on a positive note, and looking for a move higher. But as I said, the stats at the moment that we just looked at in terms of these show that it's not showing, just from this small amount of stats, it's not showing potential for a bottom at the moment in terms of a major follow through day kind of level in the breadth. We need to see a lot more improvement in the breadth before we potentially see a bottom, I would imagine. So I might be wrong, but in terms of just what we're seeing from the data at the moment, it doesn't look like it would be a major bottom if the follow through day is successful and actually manages to move higher for a little while. So we will see on that regard. NASDAQ, same position. We've got the spring type action. We've got the follow through day move. Something I did note, and I asked one of the people, the candlestick experts on Twitter, about, was the fact that obviously this follow through day move here, it's plus 2.31%, which is great. But it is actually on it was on options expiration day for the month, and there was a given that the stocks would actually move up towards that level. Was the pinning level for the NASDAQ and the S&P 500 was pushed towards for both, and it actually closed near, so which happens practically every time. So a little bit of a manipulation day as well. So it wasn't a lot of power. There was some good breakouts, but there wasn't like a huge amount of power. And there's one thing that I noted was that in the same week here, we didn't make a higher high on the follow through day. Like you would normally expect the follow through day to actually have a bigger bar and break above a near term pivot at least, especially if it's made in the same week. Apparently that's not a rule, but just from terms of thinking of a follow through day concept as a powerful move, if it doesn't actually break above make a high in the same weekly bar, then it doesn't seem that powerful. So kind of two things going on there in my mind in terms of there's the manipulation of the options expiration day, and there's the fact that it didn't make a higher high. Obviously, if it follows through on Monday and then we get that higher high, then great. But at the moment, that was a little bit of a negative in my eyes on that. Look at this from a weekly chart. You can see we've still got the stage 4 decline, similar to the S&P 500 there. We've got this obviously horizontal range that we've been in since the June low there. So potentially this could be developing towards the stage 1 range. It might be in stage 1, but we just don't know yet. We need to see this actually get back above the 10-week moving average again, start to hold, same as I was saying with the S&P 500, get back above the 30-week, start to build out, and then you potentially could move up into stage 2 if it can get back above there. So 1300 level on the NASDAQ composite at the moment looks like the kind of stage 2 level at the moment. That's a major sort of zone of resistance in here. It's got obviously prior lows from over this area here, and then through all of this year, this has been tested multiple times, this range. So move above 13,000 is probably where we're looking for stage 2 at the moment in that. But again, it could form at a lower level depending on how long it takes to get up to that kind of area, and we could just make a stage 4 continuation breakdown. This is the SATA chart. So this is the stage analysis technical attributes chart this is the NASDAQ 100 E-mini futures. So obviously the futures have opened. We've had a move higher. You can see here at the moment, we've still got a SATA rating of 0 at the moment. So you can see at other major bottoms, the SATA score remained at a 1 or a 0. So we were at a 0, then it was a 0, 1. So it didn't start to transition to stage 1 behavior until much after a long way up. These were V bottoms though. This has been a bit more of a, if it is a bottom here, this would be a double bottom, so a little bit different, but you potentially wouldn't get a character change till it started getting through some of these moving averages. So you start to get above the 10-week moving average there, that'll add another 1 to it if that starts to turn back up again, and through the 30-week there. So at the moment, attempting to obviously develop into stage 1, but still in what we would consider stage 4B at the moment. So late in stage 4. We've been in stage 4 for a while now. So you can get this stage analysis technical attributes indicator. So as I said, this is shown on this chart in 3 different ways. We've got on the top chart here, just as the background bands, we've got if we show this one here, you've got it as the oscillator showing the score from 0 to 10. Then the bottom here, we've got the coloured bands that show the 10 different rankings. So the top line is the breakouts and breakdowns. You've got the price and price action in this next 4. You've got momentum in the middle. You've got some volume in there, and then you've got the overhead resistance at the bottom. So it shows you all the different aspects that we look for in the stage analysis method, but in a very kind of visual way. So you can see this year mostly been red, as you know, and then you can see the combined color at the top there. So you can see we've been in stage 4 for a long time this year, but it doesn't, just because it's red doesn't mean it's in stage 4, and just because it's green doesn't mean it's in stage 2. It just means that the technical score is a 7 or above if it's green, and it's 3 or below if it's red. So basically it could, at this point here, you can see it was red in there, but it didn't start to break down into stage 4 until this kind of area here. So I had multiple weeks with a negative score before it actually turned into stage 4 there. Let's move on. Russell 2000, we've got similar behavior again to what we're seeing in the NASDAQ and the S&P 500. So a little bit better, outperforming the S&P 500 here. You can see it's slightly above the 0 line, so but still below these moving averages. See if I look at, still got an 8% move to get back up to the 200-day moving average. So much closer to the 200-day moving average than the NASDAQ per se. You can see on the chart here, there's again, I've highlighted this as stage 1 question mark. Is this a stage 1 base, or is it just a redistribution range? Is it going to just break down, make a stage 4 continuation, or are we going to have a rally up, continue to build some kind of base structure and potentially move up towards stage 2 again, or will it fail and roll back in again, make a stage 4 continuation? Who knows? At the moment, we're playing it from a follow-through day aspect with short-term market breakfast turned up a little bit. We're on bull alert status on the point and figure chart. So on our percentage of stocks above their combined moving averages. So at the moment, we're proceeding with caution on the long side, progressive exposure, but obviously still heavily cash kind of biased. So just sort of dipping a toe into the market on the long side on a potential follow-through day. As I said, 6 have already failed this year. So we're just looking at it from a market breadth weight of evidence perspective as well. ARC Innovation, similar kind of behavior again, much weaker than we're seeing in the major indexes there. Again, trying to form a spring and a test, higher low test potentially on Friday, but you can see didn't make much of a move, 1.79%, so lower than the actual major markets indexes there. You can see a potential base structure that's been developing. It's got obviously a big, if it does move up towards that 200-day moving average, there's a long way to go there, 45% just to get to the 200-day moving average. So a long way before this could get back into stage 4 type territory, stage 2 type territory. They have to break above probably 55 at this point. But again, could form higher lows, higher highs within here, and then they could form a lower level for it to potentially move into stage 2. IBD 50, very similar. It's been very weak, been continuing to make lower lows. So again, not much of a structure in this one. If we look at it from a daily, you can see again only a really minor base recently. This is continuing to make stage 4. So we need to see, just to get back above that 50-day moving average, it could potentially start to move towards 4B minus territory. But again, these growth stocks look very weak at the moment on the CanSlim front. IPO, this one's been looking better. Actually, this is wanted to highlight this, as obviously the IPO market is very speculative. So seeing this potentially form stage 1 type behavior is a good sign at the moment. But obviously at the end of the bottom of the base structure here, spring type behavior. So we need to see if it's a spring. You need to see a push up and out, up towards the upper part of the range, potentially up towards stage 2 type behavior. But obviously if it fails in this area, we could easily make a stage 4 continuation. So at the moment, just monitoring how it's performing, seeing how the base is developing. But again, it's got a ways to go in order to get back to that 200-day moving average 30%. So much closer than the ARC ETF, for example. So if we start to see this get back above the 50-day moving average, then obviously individual IPOs at that point will be screaming. So you can see through the June period here, it did start to get back through there. So there was a lot of strong moves in some of those younger, more speculative stocks. So which you can obviously play for that bottom fishing type stage 4B minus type plays that we get. Crude,